Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, today we're going to talk about two trades for which I made bad decisions, absolutely getting kicked in the ribs. That's what we do here. I show you my trades, we talk about them, so maybe you learn something. Look, I'm not perfect. I have over 600 and 700 covered call and cash secure put trades over the past 3 years, knocking down over 145,000 in profit. But here's the deal. I have bad trades as well. We learn when we talk about it, you see the trade, maybe you sit back and think, what would I have done differently? Now, in the case of these two trades, it's very obvious what I should have done, and I'm actually kicking myself right now because I left a lot of money on the table. Now look, before you move on after those two videos, I am going to show you a successful trade with UDOW. I am absolutely knocking it down with UDOW. It has become a reliable source of covered call wins for me. We're going to talk about that after we talk about my bad trade. But look, I want you to sit back, I want you to watch, and here's the deal. If you like what you're hearing today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing is this. We're talking about my bad trades for which I am literally losing a BMW, okay? I know all the cover call gurus are sitting back just chuckling, right? They're chuckling because they're sitting there thinking, man, this cat thinks he knows what he's doing. Well, look, I'm showing you my trades and they're not. So I would ask that you ask them to show you their trade. Well, they're not. They're not going to answer. So at the end of the day, I want you to come back to the channel because what we do here is we talk about the trades. We talk about strategies, right? I talk about the poor man's real estate covered call writing. I talk about trying to double our dividends, writing covered calls on these great utility stocks. I try to keep it positive and I try to use strategies to keep me motivated. You know, it is absolutely easy in these times in the stock market to not look. I know, and nobody wants to talk about it. Man, the markets can be brutal. But look, about 4 videos ago, I think I told you that this was going to happen. And in fact, all last year I told you that Wall Street buys them up to sell them off to buy them up again. All I can tell you is check the charts. When we sold off in December, man, the capitulation selling happened and then the serious selling happened because people started to lose real money. They had to sell off for taxes. And what happens when the clock turns January 3rd, 2019? Yeah, that's right. They rally it back up to all-time highs in 6 months. It's a mindset for me. Whether you buy into that mindset or not, that's fine with me. But I'm going to play these times. I'm going to play that mindset. And every opportunity as the market sells off these days, I use them as opportunities to buy, or I look to use the cash secure put like I did yesterday on UDOW, trying to cherry pick some cash secure profit. That's what we do at this channel. That's what we do here. So look, I want you to subscribe and I want you to bang that like button. Now look, we are going to talk about my bad decisions, but I want to make mention real quick. Notice this podcast link right here. I've been uploading unedited car session video. Ask John Car Session Video Podcast, where I answer your questions. Man, those are awesome opportunities for you to just listen to the information while you're driving, you're in the airport, right? You don't want to worry that somebody's doing something on screen. I get it. I'm just like you. I love the podcast. It gives me the freedom to just talk to you, tell you my stories. And if you pick something from a podcast that ups your game, absolutely love that. And look, tell me about it. Go to Facebook, search CTP Dashboard, and follow the page. That's where we have the off YouTube discussion. Now, we're going to talk about the two trades for which I'm absolutely getting kicked in the ribs, and I think you already know which ones they are. If you have been a loyal viewer of the channel, you know I absolutely love Alibaba, and I love playing Alibaba when it trades in that range, right? That 10-point range, I could bank on it. And as you can see, over the past year, Alibaba has been bankable. It will go up 10 points and down 10 points. Look, we can write cover calls on the top side, and when it falls back 10 points, we could buy those options back. We could sell a cash secure put, and when the stock starts to head higher again, we can then write the next covered call, buying back that cash secure put. Look, it is a game for me that I absolutely love and enjoy because it motivates me to stay in the game. Now, if you remember my last Alibaba trade, and I know I did a video about this where Alibaba was trading in the 170s in the Trump trade war. China trade wars affects Alibaba stock price, and it really has recently. But with that said, Alibaba still has support. because it is the Amazon of China. And at some point, the buyers come back to it. Now look, I've owned Alibaba at 210 and I've held it down to 139 and I've held it back to 190. So for me, I don't get emotional about Alibaba's swing. But this is about a most recent bad decision I made. Now, if you remember, Alibaba had hit the 180s and I wrote a covered call, and when it peeled back, I bought it back, and as it started to move higher again, I wrote another covered call, picking up another $4 or $5. And for me, Alibaba's price action was addictive, right? I thought it was going to happen again. Well, what happened is the perfect storm. And this is where the China trade wars absolutely caught me off guard. As I wrote that covered call back here, and it sold off into the 170s here, and as it starts to rally back to the 180s, I am seduced in that price action. And I'm going to go ahead and use the same strategy where I write the covered call, buy the option back, sell the cash secured put, buy it back, right? Well, the last time I did this, writing the covered call on the top side, I got $4 for it. And as it fell, I bought that option back for $1. Totally thinking it was going to happen again, right? That's where my eyes got too big. We get some nasty news, and as you can see, Alibaba starts to fall. Now, I start to break all kind of covered call rules here. Now, I start to break all kind of stock trading golden rules of my own. The first one is my 15% ripcord number. I put no stop in here because I fell in love with Alibaba's price action. I did not believe that this thing could fall this far, this fast. So when it started to fall, I'm looking for opportunities, right? And when it bounces right here, I'm actually thinking, okay, this is that opportunity again. But I didn't pull the trigger. I wrote a covered call, but they didn't take my price. I got greedy. I think at that moment, I wanted like $5 for a $5 out of the money strike. Now, what you need to understand is my Alibaba cost basis is like 158. So for this, I'm feeling pretty good. If I get a $5 out of the money strike and I get that $5 premium, I'm going to take it. I'm going to move on, right? Well, what happens next just absolutely kicks me in the ribs. Alibaba is falling 6 and 7 points every time Trump opens his mouth about China. So here I am. I'm left holding Alibaba at 149. 149 when I could have gotten out of Alibaba at 187. So in this trade, I broke two of my golden rules. One, do not fall in love with stocks. I had fallen in love with the price action of Alibaba. And when it broke through my 15% ripcord number, I should have sold. I should have put in a stop. I didn't do that. And then I think I even broke another golden rule. I didn't write cash secure puts like I usually do. When Alibaba starts to fall 6, 7, 8, 9, 10 points, I usually like to take that volatility. When the stock's falling, those cash secure puts get juicy premiums. And what I should have done is maybe write a $10 out of the money cash secure put, and if anything, collect the fat premium, which typically is $7 and $8 when Alibaba falls some 6 to 10 points in a day. And man, I could have reduced my cost basis even further. So look, I'm holding a stock now that's trading below my stock purchase price of 158. Now I enter the hope and pray business, something I didn't want to be in with Alibaba. So that's where we're at with Alibaba. I still own it. Now I haven't sold it. I still own it. I'm not taking an L on it yet. And my cost basis is 158. So look, I have been here, done that. And this goes back to what I always tell you, getting your financial education and getting your experience, because once you get your experience, you feel it, right? And once you feel it, you can handle these emotional swings in some of your more volatile stocks. Now look, let's go ahead and talk about Wynn, because that's an even more brutal kick in the ribs. Now, if you remember my most recent trade with Wynn, you remember that I wrote a 145 covered call. I got paid $2.80, and on expiration Friday, I bought the option back and immediately wrote the next covered call. It was a great fundamental trade, a golden rules of covered call writing fundamental trade, and everything was working out. For me, I felt like Wynn had broken through. They increased their dividend to $1 a quarter. That's $4 a year. The news of Boston seemed to be resolved, and there was some good news coming out of China. Even Las Vegas Sands was getting into the high 60s. I felt like Wynn was back and it was going to head higher. So on expiration Friday, remember what happened. When Wynn was trading between 145 and 147, I got paid $2.80 for that covered call, that 145 covered call. Well, on expiration Friday, Wynn was trading just a little bit above 145. So I could actually buy back the option cheaper than the covered call premium I got paid. So I was going to make money on the option, and I was going to write the 150 30-day out of the money covered call and collect another $3 or $4. And I'm telling you, I was proud of myself. I remember going to the gym talking to Jerry. He loved it. Well, that was a moment that I will remember forever, because what happens? Almost literally the next day, the next Monday, Wynn fall. And now I'm left holding the bag, but I'm going to do exactly what I always do. I'm going to buy that option back, and we're going to look to write the next one on a green day. But Wynn continues to fall, and now, again, China trade wars, we have volatility, and Wynn finds itself falling all the way down to 108. And my cost basis on Wynn is $30 higher. So I am literally left holding the bag of where we were in December when Wynn hit 91. I am deep out of the money in terms of stock loss. And if I'm going to write the next covered call down here at 109, I'm dancing with the devil, right? Because if I write that 115 covered call, collect that premium, and Wynn catches some good news, it's going to shoot above 115, and I'm going to have to buy that option back, adding to my cost basis, and here we go again. Possibly another bad decision. And I do not want to chase one bad decision after another. I would rather hold my position right here, see if Wynn can get some footing. I'm actually hoping the entire market gets a little footing. And if we can start to move higher, I'm going to start looking to write those deep out of the money covered calls. Keep my windows tight, maybe 3 weeks instead of the 30 or 45-day marker. And I'm just going to hope to cherry pick those deep out of the money calls and hope I don't get put in a situation where I have to buy the option back, adding to my cost basis. But look, that's where, again, experience comes into play, because I have done this time and time again, so I'm very comfortable with it. Now, with this Wynn trade is different than the BABA trade. The BABA trade, I absolutely fell in love with the price action Alibaba, and I was blinded by the idea that BABA would go lower, because I believe BABA is more like Amazon than a CVS, right? It's going to always have that push higher because it is so huge and influential. So for me, I fell in love with BABA. Wynn, on the other hand, I have made a ton of money with Wynn, but in this case, this trade, I could have walked away having my shares taken away at 145. So I really felt like I made a good trade, but man, with the markets near all-time highs, I just got seduced with the idea that Wynn can go higher. We're going to talk about UDOW right now. This market is absolutely volatile. They run them up to sell them off to run them up. You know, we get bad news today, and then 2 weeks later, they forget about that news and they're running them back up. It will not surprise me that in the next week or so, we start getting these analysts coming out saying the S&P is cheap now. You know, when I wrote these calls, the S&P was up 17 to 18% this year. The S&P is now trading up 10 and 11%. So it has fallen some 6 and 7%. And I'm telling you, that's when the analysts come out and they're going to start saying that the S&P is cheap. Look, I have no crystal ball. I make no predictions. I want you to remember that, because this, in my opinion, is how the stock market works. So for me, every day is an opportunity to have success, because we could wake up tomorrow and the sentiment on Wall Street has changed. Now look, let's go ahead and look at my UDOW trade, because UDOW is absolutely filling up my wallet. Now, at the beginning of the year, I decided to use a 3X ETF. I wanted to use it to see if I could play an index, right? I wanted to play the volatility of the Dow, but I'm trading the Dow, right? So I don't have to look at an individual stock like Wynn or BABA and pray that it comes back based on good news. It's the Dow, it's the S&P. So I want to play those indexes because, again, I believe they run them up to sell them off to run them up. So it's going to be like that. So let's play that volatility. So that's what I did. Early this year, I did 2 videos on it, playing the 3X ETF UDOW. And UDOW pays some huge premiums, but it is volatile, and it's a 3X leveraged ETF. So there are a lot of people out there that don't like 3X leveraged ETFs. I'm trading covered calls. I'm doing it every single month. And so far, I've had all my shares taken away. So I make my max profit. We move on. So that whole idea that it's a depreciating asset, I'm not affected by that because I've had my shares taken away. Well, recently when the Dow was having trouble breaking resistance, it fell. And when it fell, I used that opportunity to buy 200 shares. Well, I bought in too early, and as you can see, UDOW has done nothing but fall down into the 84 realm. And yeah, I have 200 shares at a higher cost basis. But remember what I told you in those videos. I'm very measured in how I play UDOW. I'm not going to buy just to keep buying and buying buying. I'm not going to throw good money after bad money and find myself in a bad spot. I have an allotment of 400 shares with UDOW, and I'm not going to buy all 400 at one shot. I'm going to buy them in 100 share increments. I'm going to write that covered call. We're going to move on. Well, I've already used 200 of those shares a bit too early. Now, I've written covered calls on them, bought the options back, written other covered calls, and I recently bought those back. So I'm bringing my cost basis down. I'm not profitable yet, but I'm going to use those shares as UDOW rebounds with the rest of the Dow if we get some good news. Now, yesterday, UDOW had fallen because the Dow fell over 300 points. UDOW was down some $3 and $4. What did I do? Instead of buying 100 shares and taking on that risk of owning another 100 shares, I decided to use the cash secure put. Because I'm upping the money for a cash secure put, I'm going to use this as 100 shares. For me, I have 400 shares that I'm going to use for my UDOW strategy. 200 shares have already been purchased. I have 200 left. So I used the money of 100 shares to sell an at the money cash secure put. And when it was trading right below 85, I was able to get $6.50 for an at-the-money cash secure put. Now, for me, I'm really banking on the idea that UDOW is going to move a little bit higher. And what are we going to do? We're probably going to use my 50% rule on this one. If the Dow rallies higher, UDOW will as well. And as it gets away from my 85 strike, maybe it gets to 87, maybe it gets to 90, that $6.50 is going to reduce, right? Because the likelihood of it finishing at 85 or lower is unlikely. Now, as that reduces 1 point, 2 point, 3 point, hey, look, that's 100 shares. So I'm pocketing $100 every single time it moves higher. What I'm hoping to do is have it get up to the point where this dips below $3.50. I'm going to buy it back. That's going to be another cherry picking some cash secure puts. We play the downside volatility just to pick up some cash secure put profit. Now, with that said, UDOW has absolutely killed it for me this year. I think of all the money I've used for UDOW in the past 6 months, that money is up 6 and 7%. Cash on cash, I absolutely love playing indexes, right? I'm playing the Dow, I'm not playing an individual stock. So I feel like I'm playing this volatile ETF for the higher premiums, but I'm playing the Dow. Now look, you have to be emotionally strong dealing with a stock market that's falling. Hey, look, I hope you enjoyed this video today, watching my bad trades. I may have a lot of successful trades and I always try to keep it positive, but I too am not perfect. I have bad trades that I have to manage. And I'll tell you what, through my experience, I'm able to do that. And hey, I always wish you the best in trading because I know a lot of you are feeling the same pain that I am. Now look, before I get going, remember to subscribe to the channel. It's right there. We got so much happening. You cannot even believe it. So I want you to be a part of it. And while you're there, bang that like button. It lets me know you like what I'm doing. Until next time, I hope all your covered calls are profitable.